Hello everyone, this is Anna from Savvy Cat Realty, and today I'm here to talk to you about what happened in 2025 in the real estate market and what can you expect for 2026, what trends are appearing, so overall our yearly market report. So for those of you that don't know, Savvy Cat Realty is a relocation and investment agency that helps expats move to Portugal in a sustainable lifestyle way. Our goal is to help you find the ideal property for your own budget and lifestyle requirements in all of continental Portugal. And we work with both rentals and purchases with a team of fully locals. And of course, we want to help you find and give you all the information to make sure you make a good purchases, as our goal is also to make sure your money is well spent and you are not inflating the local market. So if this makes sense to you, do check out our website in www.savvycatrealty.com, where we have everything listed very transparently. So going into today's video, which is basically our yearly market report. So just to start, I want to help you understand where I am basing this information on. And I'm going to be looking at my screen a bit because, well, I have to see the information in the numbers. So do keep that in mind. But overall, I am using 3 different data sources to make you these predictions and informative videos. I am using the INE dataset, which in my personal opinion is the most important one. And the INE is basically the official real estate, the official state data. So it's basically the state statistic data in Portugal. And this is the only platform that gives you real values of actual transactions taking place, of basically all the transactions taking place, because the data is gathered based on the deeds and registered from the deeds. So overall, it is the most reliable platform for what is actually happening. The downside of this platform is that it's very, very slow to update. So just in December, they published a preliminary report on the third quarter of 2023, and this report just gives us overall increase and index numbers. It's not giving us the municipality data, the transaction data, and it's just giving us an overall national overview of how the increase, and if there was an increase or decrease in the market. So I'm using most of the data from Q1 and Q2 2025 for the comparisons, as that is the actual full data set that is available. And unfortunately, it is likely that the full data set of third quarter of 2025 will only be available in March, which is a bit annoying, given it's basically 6 months delayed from the end of the quarter. But like I said, it's the state data, it's the most reliable one, it's just slow. So the second data set that I use is the data set from Idealista, which is actually publicly available, but it's only average transaction prices. And of course, this is based on listings on Idealista. And you can use it to search, narrow it out pretty much by municipality, district, locality, anything you want. So it can be very useful in that way. And I'm also going over whether or not there's being a discrepancy and how big the discrepancy is between these listing prices and the actually what's happening in INE. So the third data set that I'm using is Casafari. And Casafari is a paid platform that basically is a multiple listing system, an MLS system that gathers all of the data from basically all the market. So private agencies, all of the listing agencies, and basically puts it all together and gives us a lot of information. With Casafari, gives you a lot more detail on what's on the market, and I'm able to see the market stock, the type of properties on the market, if they're apartments, if they're houses, how long they've been, how long they took to sell. It basically gives me a lot more detailed and a lot more information overall, but it's also once again based on listings. So the only one that is based on actual transactions and does list all of the transactions on a national level is INE. So always keep that in mind when I'm going over this information here. What is happening in the market? The market is still growing. It's actually growing very significantly. So let's start looking at the transactions, because that obviously also very important. From Q2 2024 to Q2 2025, like I said, I'm using this reference because of the available data in INE. The residential price rises, the residential property prices rise roughly 17 to 18% from one year to the other. So this is a very, very significant increase. And the growth was bigger on new builds, which is very normal because the increase on the costs and property prices tends to be very directly reflected on new builds. And the preliminary third quarter 2025 data suggests that this increase is continued. I think the increase in Q3 was 11%. I have the data here, so I will be confirming it in a bit. So then looking at Casafari, which gives us a lot more detail into the market behavior, we have a bit more information, and we are able to tell that apartments have increased in price more than moradias, more than villas. And in apartments, we have a roughly 10% increase, while in moradias, it's closer to 7-8. And overall, that would be an average of a 9 increase over the two markets. So overall, Casafari is showing a slightly lower growth than INE, which is interesting. It shows that people are not asking as much, but the actual sale prices overall are going up, but not as fast as the asking prices are going up. And this is also very easy to explain. So basically, one of the other things that is important to note is that of course, what the sellers want is to get as much money as possible for their assets or their property. So it is very common that the sellers will try to sell at the highest possible price and see if anyone takes it, and then go down if that doesn't happen. And there's very little control and data availability here in Portugal. So it's very hard, especially for international buyers, to actually be well informed whether or not these prices are being pushed up or not. But of course, there is also the factor of actual demand. And as long as the availability is lower than the demand, the prices are going to keep rising because people are, there's a lot of buyers in the market. And that is very likely not going to change. So one of the conclusions here is that, of course, the trend is going to be the prices keep increasing as long as there is demand. And although the Portuguese state did try to make an effort to increase the housing and improve housing policies to reduce the internal impact, because it's becoming a very, very significant price problem that the locals are being priced out of their own birthplaces, and houses are becoming increasingly unaffordable for locals, given that the internal economy is not that strong and the minimum wage is very low. And Portugal is one of the highest places when it comes to the gap between minimum wage and price of property. So this is a very big problem in Portugal, and the government has been making an effort to try and increase the supply, and the supply and the amount of construction has been increasing, and it's a healthy amount of new construction happening in Portugal, but still not enough, as demand is still increasing more. So this production is being absorbed into the market and the prices are still rising. And like I said, all data indicates that this will keep going into 2026. This is not a bubble, this is a stable market. There is supply, there is more supply than demand. And unfortunately, I don't believe the prices are going to go down anytime soon. So, when it comes to Idealista is a similar data set. It's basically a simpler data set than Casafari. Casafari also integrates the data from Idealista, but Idealista is a lot faster and easier to consult, as it only focuses on price per square meter. And in Idealista, it shows us between 10 and 12% increase from Q2 2024 to Q2 2025, which is aligned with the rest of information and interesting overall. Going back into the Casafari data, I can tell you that once again, apartments have been on higher demand than houses, and this is also easy to explain with the markets that are the most active and the most productive, being the major cities in which you construct vertically a lot more. And even though our major cities, like I said, Portugal is a fairly small country. We have a population of 11-something million. And even our capital, Lisbon, the town center only has 3-point-something million inhabitants. So from a world perspective, it's still a very small town. And like I said, as long as the national and international interest keeps rising, the demand is not going to go down, because the city is still small in comparison to looking at it from the world perspective. So apartments are being built and are on very high demand. What is happening is, of course, that they are also showing a bigger increase in price. Houses are in average cheaper per square meter. So apartments are giving us an average between 3,650 euros per square meter, while houses give us 2,150 euros per square meter. So it is more than 1,000 euros per square meter cheaper. However, if you look at the overall average, the transaction value of apartments, it's still lower than the villas. So this, of course, just shows you that villas are always much bigger than apartments, and probably there is more transactions of smaller apartments than big apartments. So now we're going into the most affordable and most expensive districts. This was once again based on the INE data. And when it comes to municipalities, we have the most expensive municipalities are Cascais and Lisbon, which is not surprising at all, and they sit well above the others in the chart here. So Cascais and Lisbon are both above 4,500 euros per square meter, while the next highest rated or highest priced municipality in Portugal is Loulé, which sits at about 4,500 euros per square meter currently in the or on the second quarter of 2025, which, like I said, INE dataset. So while the next one is Oeiras, which is also in Lisbon, and Oeiras is almost showing a very, very similar curve to Lagos. And then finally we have Porto and Faro also showing very, very similar curves and values. So overall, this gives you the information that these markets are the most demanded for two reasons. One, they are district capitals. They are places where you have a lot of people, a lot of jobs, a lot of things happening. And the second one, so basically all of the municipalities here are Algarve and Lisbon, and then you just have Porto. Those are the top 7 in the most expensive municipalities. So basically we have the very high demand Algarve market that increases in price due to exclusivity and quality of life in beautiful landscapes and weather. And then of course the capital, the 4 districts, not 4, 1, 2, 3, no, 3 districts of this list are in Lisbon area. Then we have 3 in Algarve, and then Porto. That's basically the top 7 most expensive municipalities in Portugal on 2025. I am also going into the district capitals. So in Portugal, we have 18 districts in continental Portugal. And once again, you can see here that Lisbon is just on a completely different level. It is completely separated from the other ones. At almost 6,000 euros per square meter average asking price. Once again, this is district, so a bigger area. And then we have Porto, under 4,000 euros per square meter. Then we have Faro, that is still slightly cheaper than Porto here, at just above 3,000 euros per square meter. And then we have Aveiro. Aveiro is a place where you have a municipality where we had a huge amount of new building happening, which was a very curious thing because it didn't drastically affect the buying market. The prices still rose steadily. However, it affected the rental market, and the rentals started not inflating as quickly as they would. So basically they inflated very fast before this construction boom. Then the construction boom happened and the rental market stabilized while the construction prices kept rising, but more steadily, I guess slower. So I was on the list of district capitals. Then after the Aveiro, we have Évora, which is in Alentejo, and it's been developing a lot. And this brings me to the municipalities with the most growth, which is, of course, a very, very important information. Which municipalities grew the most when it comes to pricing in this period of time, from the second quarter of 2024 to the second quarter of 2025. And they have been Faro, number 1 growth and number 1 in price, but the steepest curve. And then Setúbal has a very similarly steep curve. And both Coimbra and Leiria are also not as steep as Faro and Setúbal, but still quite steep. And then we have Braga, which have a very, very similar curve to Leiria and Coimbra, but has a bigger spike in the last quarter. And then we have Guimarães and Vila Nova de Famalicão. So these are districts that are up and coming and municipalities that are up and coming and are still growing, and I highly recommend for investment. Overall, I did say I was going to mention the differences between prices on actual INE data and Idealista data. So in that regard, you can see there is some difference and some increase in the Idealista data, but I would say it depends drastically on the municipality and on the location. So Lisbon is where the data is showing a biggest gap between what INE registered and what Idealista registered. So there is probably about a 15% gap here, while the next one with the biggest gap is Faro, which is a very touristic, although a long-term life city that developed. It's also one of our top growth cities. So in Faro, you have probably closer to a 10% gap. Then Setúbal with a similar, slightly lower gap. And followed by Porto, that I would say the gap is very similar to Setúbal. And then Aveiro, Évora, and Coimbra. So overall, the least active and the least demanded the market is, the smaller this gap is going to be. So overall, the prices don't get as inflated, inflated, with Lisbon being the big show here on how this very high demand and high movement markets is where the sellers and the overall market itself tries to push the prices the most. So I hope that this gives you a useful information regarding the 2026 trends. Overall, what I'm telling you is no, the market is not going to go down anytime soon unless there is a huge catastrophe happening, which doesn't seem likely. The political situation in Portugal is stable, the geographical situation is stable, and overall, even if there is a big problem, Portugal is known to stay neutral. So I don't believe that Portugal is going to have a market crash or decrease in prices. And I do believe this is unfortunate in the sense that, unfortunately, the local market is not being stimulated enough. I do think the Portuguese economy could be doing a lot better than it is. And that is because the government focused a lot on international policies of bringing foreign money instead of generating internal wealth. And this is something I think could have been done differently and better. But it is what it is, and this is not good for the Portuguese people. But overall, when you look at the international market and the Portugal and the world, the market is stable and is going to keep growing, and it's not going to decrease in interest. And Portugal still has a lot of room for growth. And it's still a small country, like I said, 11 million population. So if you have even 1% of the world population wanting to move here, it's already a lot of demand for a country this size. So I hope that this overview of the market in 2025 was helpful to you. We are here every week with new information about Portugal, places in Portugal, and cultural and useful information. So if this is useful to you, do subscribe to our channel here on YouTube. You can also schedule a call with us directly and a free call on our website in www.savvycatrealty.com. This information will be available on a blog post and an overall report that will be available on our website and will be released on our newsletter on the 30th of February. And then a complete market with all of the private data from Casa Fari and compared with Idealista and INE will only be available for SavvyCat buying clients. So the public available report will be the overview report and not the full detailed report. So once again, I hope you enjoyed this, and I would love to hear your opinions on the market and what's happening, and see you all again next week. Bye!